Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for October 9, 2018. We're updating our levels on the main indices after last week's fall. We did have our expected or dominant thesis, sell swing and peak or rise in volatility on a departure or sell swing away from the 2950 level in the S&P, the 7700 level in the Nasdaq, and the Dow Jones on a departure away from the 27,000 level. So now we'll pick up the pieces, take profits on positions if need be, and look toward the future on the next swing. So given these pullbacks on the broader indices, again, individual stocks such as Apple, Amazon, and the like did pull back toward their support targets. But in this video, we're just going to focus on the main broader picture levels, including the indices themselves through the futures contracts. And that just sets up the bigger picture or the main play. Given the pullback, all these levels have been achieved, and we'll just take a look at these throughout the video. That is the prior high in January. It's a pivot point, and it's roughly 2870. So the S&P has fallen from the 2945 level toward our first target. Going forward into this week and potentially the next, we are looking for stabilization. After a big move, we can take a look at any number of those. There typically is a stabilization period where the market does go sideways or at least bounces to the upside. Our focal point going forward, Tuesday, Wednesday, Thursday, is going to be 2900 in the ES futures. In today's session, just taking a look at it quickly, we had a range day develop with the session high at 2900, and we're playing a triangle or consolidation range contraction after a wider period of range expansion. This is expected. This is what typically happens. For the remainder of the week, we will keep our focus on 2870 and 2900. Anything above 2900 should set in motion a short squeeze or just a simple bullish rally toward 2930 and the like. If we take a look at our volume profile charts, we do see, those of us that follow this concept, an open air pocket. What's an open air pocket? It's a level where not a lot of price and volume transacted. These bars are just levels where volume, if you put that into a price point, turn the distribution curve sideways, that's what we get. It shows us sideways or quickly on a chart periods of range contraction, consolidation, balance, and range expansion or trend movement. Markets typically move quickly through open air pockets, and they move from value area to the other. Point of control is the red, or the space where the most volume and price has taken place. Point is, a open air pocket exists above 2890 and roughly 2895. Just make it simple, 2900. If the S&P can pierce through these resistance points, that does open a multi-day swing toward 2920, 2925, or just call it even 2930. That's the levels for the S&P. We'll take a look now at the Nasdaq. It, despite the volatility, has emerged quickly, rapidly, on a major sell swing on high volume, not dissimilar to September, away from its visible rising trendline range. We've been calling this a bearish rising wedge with decreased bullish volume, and if we zoom in closely, increased bearish volume. This does not bode well for the future. But again, this video is only taking a look at the next few sessions and into the week ahead. Our pivot point for the Nasdaq is 7340. It's the prior high, prior low, and at this point is a pivot point. If you want to be more simple about it, 7350, maybe even 7300 is our lower support pivot against which the market is playing higher. In that corner, we see the Nasdaq into a consolidation spot with a little higher volume node. The bigger volume node is up here between 7650 and 7700. That was our prior week's range contraction, range expansion, and that range expansion of the last week is giving way currently to range consolidation or contraction. the open air pocket, and thus the potential for a rapid upside movement the next few sessions, if that occurs, is above 74.50 in the Nasdaq. That could set in motion a mirror image, or whatever happened on this side with range expansion down could happen quickly. Maybe not as quickly because markets fall faster than they rise, but nonetheless a short squeezed bullish upside path toward about 76.50. That's playing off of a breakout from here. On the Dow Mini Futures, it's been a little stronger. It made a new swing high, 2018 high, into the 27,000 level. Other indices fell a little bit shy of that. So given that the S&P is playing off its 50-day moving average, the Dow Jones futures are playing off of its 20-day, and that's about 26,500, roughly speaking 26,500. That's a potential buy spot, any level to play any upside pathway away from your moving averages. The Russell has been the one index that has been weak, getting weaker. I mentioned the prior high into the Dow futures. The Russell did not keep pace with that. It fell shy of 1750, made a lower high on rising bear volume on the way up, and then pierced through our 1700 and rectangle or consolidation period. And when the market itself turned lower, with the Russell in a weaker position, that sent shares tumbling through 1675 all the way to 1625, which happens to be the January high, also the March high, to an extent the May low, and, I think more importantly, the 200-day simple moving average. The theme of the video, we'll certainly see how this plays out in the next few sessions, is for a potential bounce play in these indices off of successfully achieved targets. We do see upside potential through open air pockets, but that's only if these markets pierce on through them going into Wednesday, Thursday. If not, the alternate thesis begins to take shape, and that is a wider liquidation event. Be prepared for that if it were to happen, which is if these levels mentioned in this night's video begin to fail. If that happens, we'll have a liquidation event first toward 2800 in the ES futures, 72, maybe even 7100 in the Nasdaq, and lower in the Dow futures. Again, plan, prepare, have your theses and action plans ready, but react to what the market actually does in real time. That's how the positions are formed and managed. This is Corey Rosenblum with the Theo Night video for October 9, 2018.